Is the pain trade now to the up or to the downside?
I think the tendency is definitely up. The trend is up. I mean, if the ceasefire holds, it looks good now. That's a tremendous plus for the markets. I think all-time highs for the S&P are virtually a foregone conclusion now, and further highs after that. I mean, Powell was flexible. Clearly, Congress wants interest rates to go down. A number of Fed officials do. That could be a positive. I think they should go down also. So with the Mideast developments, with AI, as Andrew, your previous guest, pointed out, I mean, the artificial intelligence revolution is just in the early stages. I think there's a lot of positives for this market.
So if we just go back a week or 2 weeks ago, when an Israel-Iran conflict was not even on anyone's radar, stocks are still above the level we were then. So fundamentally, what's actually driving the market?
Well, I mean, if we have a non-nuclear Iran, if there is a ceasefire that now takes out, the possibility of a major oil disruption, I would still like to see the Houthis neutralized so that we can get shipping around the Red Sea, and that would lower costs also. But all that would bring down the temperature in the Mideast dramatically, and maybe normalize relations in that oil-rich area. So, I mean, I think certainly the developments are positive. Also for the United States. I mean, this was. I'm a little older. I remember 45 years ago when our helicopter crashed in the desert storm, and trying to rescue some of our diplomats caught in Tehran. It was a tremendous embarrassment for the United States for years. I mean, this was executed extraordinarily well. That sort of power image, I think, is also not lost on China with respect to whatever ambitions they might have on Taiwan, which would also be a favorable development in that direction.
I am curious, though, when we talk about, Professor, this idea of a market that at least has found some comfort with, I guess, the chaos that is out there, whether it's in the Mideast or even back here at home. Jay Powell was on the Capitol Hill today, obviously peppered with a lot of questions about rate cuts and the state of the economy. He seemed to suggest, as he clearly usually does, that the economy is in a good place. But he also seemed to be finally sort of echoing the comments that we've heard from other FOMC members, this idea that should there be a need to cut rates, and in their view, they think there might be, they are ready to do so, and relatively soon. What did you make of his comments?
Yeah, I thought he tilted a bit more on the dovish side. I mean, I agree with Waller, Bowman, Austin Goolsbee. I mean, I think that the Fed is in a restrictive stance. I think that now that the oil is, you can see the big drop, as you said, actually, I think lower than it was on the day before Israel started the bombing of Iran. Home prices, now not many people commented. I watched the Case-Shiller home price index very closely, and the FHFA index. Home prices are beginning to fall. This is, shelter is 40% of the core CPI. And as Powell mentioned on Capitol Hill today, they come in with really big lags. We're beginning to see the declines on the top end that is going to feed in the next 12 months a negative rate of inflation. If firms use AI, they can. I'm not saying they can offset all the costs. I doubt that the Trump tariffs are going to impose, but I think they're going to offset some of them, and perhaps more than a lot of people expect, so that inflation fear is lessened. Secondly, I don't think that whatever the inflation from the tariffs, the Fed should act on a tariff-caused inflation. That's like a tax, and it's not an excess demand situation, which the Fed needs to act on. Yeah. It's just a tax. We can see through it. It's a one-time bump. Assuming, again, I'll say the one thing, the market is assuming that the current level of 10 and 30, 10 base, 30 for China. Now, I know aluminum and steel are higher. Basically, that's going to hold, and that we're certainly not going anywhere near back to those, Liberation Day tariffs. If we do, all bets are off, in my opinion.